Hey, everybody. Welcome back to Earnings Call. I'm Jeffrey Beamer, Senior Investment Strategist over at ewotrader.com. We are back after a holiday week, but if you've been with us for a while, you know we don't just talk about stocks. We talk about how to profit from company earnings. Okay, so each and every week, companies are declaring earnings. It's just like clockwork. So this week marks the final full week of February 2026. And we are anchored by a heavy corporate earnings calendar with over 800 companies declaring earnings results this week. Now, some notable names up to bat this week include Home Depot, NRG, Intuit, Nvidia, Dell Technology, Alibaba, and more. So we're going to go through our list and talk about the best potential candidates for trades along with trade updates. And I do have a new opportunity for you. And you're definitely going to see one of our trade updates. So stick around. Here we go. Okay, each and every week we do have earnings. And here is our list of earnings this week. And how we break this list down is by stocks that have potential breakouts, meaning the underlying stock will move 10% or more. And those numbers come up from option market makers and what they estimate the stock how it will react around earnings. Okay. So breakout stocks on the left and what we call quiet stocks on the right. These are companies where the stock is going to move between 9% or less. Okay. Single digits. So really it's double digits on the left, single digits on the right. And we use different option strategies for each one. All right. So for the quiet stocks, we like to sell premium because implied volatility is expensive. Implied volatility is high, and options are expensive. All right. And we like to sell option premium. We do that through a strategy called an Iron Condor. And then for the stocks that are breakout, while implied volatility is high and options are expensive, that breakout can potentially make us a lot of money through two strategies, either a strangle or a straddle. All right. And I'll talk a little bit more about those as we go through the show. But you can see our list here, and we're going to start on the quiet side of the list. Okay. So let me give you an example of what a quiet stock looks like. This is Pfizer. Okay. Now, Pfizer does not have earnings this week. It had it a couple weeks ago. But you can see how quiet this stock is. Okay. It just does not move anywhere. Even through earnings, it barely moves a couple of percentage points. Okay. Now, this is a relatively inexpensive stock at $27, but I'll talk about how to handle those here as we go through our list. Okay. But that's just an example of a quiet stock. So, what does our list look like this week? Well, we have some companies that you might be familiar with. Okay. We have Home Depot and Hewlett Packard, or HP now, TJ Maxx, Nvidia, and Baidu. Okay. To name just a few. So let's go to the charts and take a look at these because some of them have already announced earnings. So starting with Dominion Energy here, they had earnings this morning. Okay. So they declared Monday, February 23rd, before market open. The average move here is about 3%. Now, for some reason, my percentage change isn't up here, but it is over here. You can see the stock is down. Look at that, just under 2%, or excuse me, just under 3%. It's down to 2.47%, and right in the range. Okay. Now, this is a $65 stock, and really for using Iron Condors, I like stocks that are about $50 and above. Okay. While we can get some good opportunities on stocks between, I would say, $25 and $50, really it's these stocks that are up in price up to about $300, and then it becomes a little bit more difficult when you're over $300. So there is a little bit of a wheelhouse for these. Okay. So also we have I pronounce this one okay, but it might be Aniak. All right. Aniak. We'll go with that. How about that? They will have earnings. Today they had earnings before market open today. The average move here is 6%, and That is the average expected move. Okay. It's not just average move, it's average expected move. And look at that. It only moved 37 basis points today. Quite a move. Okay. Perfect. This is an $85, $87 stock. Perfect for an Iron Condor a type of trade. One of our regular visitors here is Home Depot. Now, Home Depot will declare tomorrow morning. That'll be Tuesday. Let's update that. That is Tuesday, February 24th, before market open. The average move here is 3%. The average expected move here is 3%. Okay. And the last earnings that the stock did gap down a little bit of volatility there, a little bit over 3%. But that's why I like to add a little plus or minus here of 3% on these moves, because option market makers, again, they're estimating based upon many different factors, and option prices are being priced based upon timed expiration, implied volatility, and other factors. Okay. So just realize sometimes these stocks move more, sometimes they move less. All right. Moving on through the list, Kava Group will have earnings tomorrow, Tuesday, February 24th, after market close. The average move here is 5%. So again, we have a $67 stock, an Iron Condor. We'd like to, get our break evens. There's a break even above and a break even below, because we're selling two vertical spreads combined together. Okay, selling a call spread on top, selling a put spread on bottom. That's one way to look at an Iron Condor. And I want my break evens to be, 6 or 7% out of the money when a stock has an expected average move of around 5%. Okay, hope that makes sense. Now, another popular stock that we like to trade is TJ Maxx, or TJX now. TJ will have earnings on Wednesday, February 25th, before market open. A lot of these this week are before market open. The average expected move here is 4%. Okay. Beautiful stock, $150, in that range, 156. Lots of option strikes to choose from, either above or below. So a good candidate for an Iron Condor here on TJX. All right. Moving on, we have Bank of Montreal, BMO. They will declare earnings on Wednesday, February 25th, before market open. And the average move here is 4%. And I'm going to sound like a broken record, but here with the stock at $142, beautiful stock to try to trade. And you can see last earnings announcement back here in December. Look how quiet. I mean, the stock barely moved through earnings. It didn't even give it a hint of, like it didn't happen. Okay. And that's why we like these quiet stocks and selling Iron Condors. Earnings before that, you can see this move up, but this, believe it or not, that big candle right there, well within the average expected range for the stock. Okay. But then you have other days like this where they just don't move very much. So we'll see what happens on Wednesday. But a big bank and another earnings announcement. Okay. Also on our list for quiet stocks is Baidu. Okay. Now, Baidu will have earnings on Thursday, February 26th, before market open. And I might have misspoken earlier and said Alibaba has earnings this week. I'm sorry, Baidu has earnings this week. Okay. The average expected move here is about 6%. All right. So you can see I'm not worried about gaps, when I look back at the chart. Okay. Because it's not really around earnings. Okay. Here's the last earnings announcement. And you can see we had this whipsaw candle where we gapped down on the open and then rallied higher and closed higher on the low. And it's just kind of in the range of all these other days. All right. So I'm only worried about the earnings event and the following day or days. How does the stock behave? Okay, I'm not worried that the stock has gone from 160 to 130 in about less than a month. Okay, I'm just worried about that earnings event. All right. Okay, VST. They will have earnings Thursday, February 26th. And that will be before market open. The average move here is about 6%. So BST, $165 stock, great candidate. We look back at price here. You can see last earnings event. Look at that. We have just like it didn't happen. Okay. Earnings prior, it actually is right there. Let me throw that. Okay. Like it didn't even happen. Okay. A little volatility ahead, a little bit after, but going right through it, right in a range. Very, very nice. Okay. So actually BST, good candidate for our strategies through earnings. Okay. So VST, Vistra, will declare Thursday, February 26th before market open, and they're expecting about a 6% move. And again, it could be less and it could be more. Okay, that's why we like to manage our trades and not trade more than what we might be comfortable with in losing. Okay, because you got to be always ask yourself that first. All right, what if I'm wrong? And trade accordingly. All right, moving through the list, really the key one for this week is Nvidia. They're going to declare Wednesday, February 25th, after market close. Sorry if I got a little out of order here. Nvidia will just doesn't move like they used to. They're a quiet stock. The average move here, average expected move is 6%. So we'll see either higher or lower. And you can see the last earnings event. I mean, the day after it just really had a little volatility, gapped higher, closed lower. Okay. That reversal. I mean, but look at that, stays right in within the range. If you look at the closes, I mean, just right, nothing too crazy there. Now, I did want to talk about EchoStar for just a moment. It is on our list for this week, but we got updated earlier today. They will actually declare earnings on Monday, March 2nd. So a week from today, but they're going to do it before market open. So this is a $100 stock. It is on our list. I would wait till Friday to put on a trade. Okay. Wait till Friday, put on your trade. Then you have the weekend full of theta decay, which actually helps us because an Iron Condor is done at a credit, not a debit. Iron Condor done at a credit, not a debit. So we like theta decay on these. We have the theta decay over the weekend and then earnings on Monday. Boom. Could be almost an instantaneous profit on this if we structure the trade right. Okay. And then that is all for quiet stocks. Now, let's transition here and let's go to stocks that everybody likes to focus on, which are the breakout stocks. All right. Because these are fun to watch. They're fun to actually trade, especially when you're right. All right. And I'm going to show you. Well, let's start with this example of Akamai. Akamai had earnings just a couple of weeks ago. And you can see big move down on the stock. This is a mover. Okay. This stock usually moves double digits around earnings. And it is a fun stock to trade. So we do straddles and strangles. We buy premium going into these, buy a straddle or via strangle. And let's take it our list for this week. All right, because we do have some notables here. And DigitalOcean NRG, which is in my part of the country. I live in the South here in Texas. All right, that's a Houston-based company, and we always like to focus on those. We also have Intuit. Intuit's really kind of the big one, but I like to watch the Trade Desk and Celsius, CELH there, that's going to declare on Thursday. Let's go through our list and let's talk about these one by one, and I'll tell you why. So DigitalOcean, all right, they're going to declare tomorrow, Tuesday, February 24th, before market open. So first thing in the morning, the average expected move here is 18%. All right. Now, for these stocks, where I like stocks that are usually $50 to $300, somewhere in that range, even more like Home Depot's $375. It's a great stock to trade. okay, around earnings. For these, I really like $50 and under, or well, really $100 and under, okay, because I like that debit to be smaller and yet still get a big move out of the stock. So DigitalOcean is one of those, okay? You can see last time, you can see that little pop, a little consolidation before the earnings announcement, and then the pop. And while it didn't move necessarily 18% on the earnings, it did have follow through, okay? It literally went from a close of 38.82 the day before, and the next day closed at 45.81. So a $7 move on a $38 stock, that's your double digits. I mean, that's your big moves, and it does this on a regular basis. Previous to that, here is a stock that closed at 27.01, and the next day closed at 34.81. Okay, so from 27.01 to 34.81 on, at the time, a $27 stock. That's a big move. That's a double digit move. All right. And that is typically what happens with these. And you can see it's been on the move. I like this consolidation right before. Okay. But now it's really started to sell off. And we'll see if we get some follow through selling tomorrow before market open. It'll be fun to watch for tomorrow. Okay. NRG, they will declare tomorrow on Tuesday, February 24th, before market open. And this is a utility stock that has an average expected move right now of 14%. Okay. This is not your mom and dad's old utility company where they just invested in a utility company, a utility stock, and they just loved the dividends. The stock didn't really go anywhere. Some of these energy stocks, man. Now, this is what they're used to. Okay. The quiet. But that's not typical for NRG. Okay. Previous to that, you get moves like this. Okay. A big thumping or a big rally. We go one more earlier. You can see the gap up here. Okay. A move back in May of last year. The close was at 119.33. 119.33, and the next day closed at 150.61. That's a big move. It doesn't look like a big move on the chart, but my scale, it's just all my scaling. Okay. You're literally going from under 120 to over 150 in a day. That's a big move. All right. So that's what can happen with some of these utility stocks. And we're going to see what happens with NRG tomorrow morning. Let's see if we get another big move. Lots happening in the oil and gas sector. We'll see if that's going to be a good play or not. Now, a little company called the Trade Desk. This used to be a nice valuation stock, but boy, they sure have sold off, and they've been having a tough time. Their stock price, as you can see, literally on the chart that you see here, it's gone from 50 to 25 since November. It's been cut in half. Since November, this stock has been cut in half. And again, we're more concerned about the earnings. Now, they will declare Wednesday, February 25th, before market open. So Wednesday morning, the average move here is 26%. 26%. Now, again, it doesn't always move like the last earnings announcement. And we see this a lot. They take a break every now and then. Okay. But prior to that, look at this. This is the move that you can expect, going from literally 90 to 55 overnight. Okay. And so this is why, this company, the Trade Desk, has done this on a consistent basis to where the average expected move is over, it's up in the 20s. All right. So that'll be one to watch. Another one to watch is Celsius. Now, here's the thing about Celsius. Okay. This is a $50 stock, just under, trading under. They will declare on Thursday, February 26th, before market open, so Thursday morning. The average move here is 26%. But look at this stock is kind of a mover. You can see the last earnings event. Take a look at this. The stock before earnings closed at 59.92. So just below $60, and the next day closed at 45.06. Almost a $15 move. Okay. And so that is what we call a breakout stock because it broke down. It didn't, it broke up. Here, look at this. It gapped up 2 days before the earnings event, or, literally that was Thursday of last week. And then here, Monday, it gaps higher. And then today, it's moving higher. Okay. On a day of the market, look at this. There's only one other Nvidia is up of all of our stocks. Look at it, all red today, except for two that are on our list for this week on these earnings: the Celsius and Nvidia. How about that? Okay. Now, that's a good $49 stock. And so you're going to have respectable debits there. Duolingo, all right. They will declare on Thursday, February 26th, after market close. And the average expected move here is 24%. Okay. So this stock, look at this. I mean, this was an expensive stock at one time, and it's, it could be expensive at $105 depending on, but man, look at this. It was back here in October, it was $350. Almost $350. And then last earnings, look at that gap down. One day you're at 260.02 and the next day you're trading at 193. From 260 to 193. I mean, that's a breakout stock that's breaking down, okay? And we're going to see what happens to Duolingo a little later this week. It'll be fun to watch, okay? And the last one, just because this one's notable, now Intuit, this is a $352 stock. So this is going to be on the expensive side. Trying to do this on a straddle or strangle on a stock that's $350, you do need a larger account because some of the debits there can get into the $3,000, $4,000, $5,000 range for just one straddle or one strangle. So you really got to either have a larger account to accommodate or be very careful. If you're if you have a smaller account, I wouldn't even trade these that are at that price point. And you'll see here in a moment where Celsius right now is about a $600 strangle, just so you know. That's a $49 stock, and that could be anywhere from $300 to $600, and right now it's trading around $6. Okay, so just as a comparison. Nonetheless, Intuit's going to declare Thursday, February 26th, after market close. And the average move here is right at 10%. And I would expect a little bit more volatility with some of the stuff that's going on in the tech sector. All right. And you can see this stock has been sinking like a rock right now, and down bigger today. Okay. With everything that's happening. So that's our list for this week. Yes, we have over 800 companies declaring earnings. Okay. But you'll notice here on our list that we focus on, my eyeballs are really on about 62 stocks. And then I consolidate that down again to some of the best candidates each week for just this show. Okay. So it's triple filtered. Okay. At a minimum, maybe even quadruple filtered to get some of these names and really get some of the best candidates. Do they always turn out a winner? No, they don't. Okay. Sometimes the quiet stocks break out, and sometimes the breakout stocks are quiet. Okay. But it's a cycle. Okay. And once they're in that rhythm of like breakout stocks, usually it's about every 3 out of 4. So 75% of the time they're doing what they do. And that's a winning strategy right there. Okay. So that's our list for the week. Now, each week I do talk about trades, and we actually closed out of 2 trades last week because of the timing. One trade, let's talk about it. It's Pinterest. Okay. That was a trade we actually put on the first week of February. Okay. The second week of February, this is a straddle. Okay. We did a straddle on Pinterest. So the second week, we held on to it. We didn't get out of it because we traded it ahead of earnings, and we had some time. I built in some time. So let me show you where we were midway through the trade, and we were up a little bit. Okay, we were up a little bit. In 7 days, we had an 11% return. 11% return on the that would have been a good place to take profits. Not bad at all. We haven't even had earnings yet. Okay, and the stock was up 11%, just $37. Okay, per straddle, $37. So if you did 10, that's $370, right? But I wanted to go ahead and hold on to this through earnings because I just felt that this stock is selling off. So we did. We held on to it a few more days and it went through earnings, and let's see how we did. Okay. And this is a trade that we sent out to our subscribers as well. All right. And look at that. Pinterest dropped like a rock, was down over 22% on earnings. So we added another 7 days. Okay. So if we were in the trade total of 14 days, ended up with a $527 profit, which is a 162% return on risk. Okay. 162% return on risk in 14 days. Only with options can you get those types of returns. Okay. The amount of risk you put into a position, I mean, compared to real estate, you're hoping to double your money in 10 years, maybe 7 years. You're hoping to double your money. We doubled our money here in 14 days. Okay. Do we get these each and every week? No, but they happen with some regularity. Remember, we had another one just a few weeks ago. Back in January, we had another big winner like this. All right. So profit wise, this is based upon a hypothetical $10,000 account. So that's a 5% return on portfolio in 14 days. 5% return on portfolio in just 14 days. That's the power of using options and trading some of these strategies around earnings. So last time here, which was 2 weeks ago, we did a quiet stock called Vertiv. Okay, we did an Iron Condor on Vertiv Holdings. VRT is the symbol. And you can see the stock was moving around a little bit, but I'm not worried about the stock movement, in front of or after. I am a little bit, but again, I'm only worried about what happens through the earnings event. Okay. So this was an Iron Condor on Vertiv. Now, Vertiv has the potential to move double digits, but the thing is, being that this was a pretty, this stock was 100 and almost $200. The options were very expensive and we could get way away from the money. In fact, I think our break evens on this were like 18% or something. I mean, way from the money. So let's see how we did, because this one's interesting. Okay. Look at that. We gapped higher all the way up to our upper break even. And it was actually the day of earnings, the day after earnings, we actually had a loss on the trade, but I held on, the market reversed, and then it traded lower again the next day. And all I wanted this stock to do was close below that that higher strike that we sold. And look at that. It closed just below that. It was a nice little trade. It did take some management. I had to watch closely. And let's see here. I wanted that trade. Let's just verify. Yeah, $235. I wanted that stock to close below 235, and it closed at 234.53. 50 cents. We had 50 cents of wiggle room. Otherwise, we would have had to trade out of it. Okay, at a profit. Okay, we would have had a profit, but here we had max profit of $134 in 9 days. Okay, because this took a little time. We sat in there for 9 days. That's a 36% return on risk. 36% return in 9 days. Actually, I don't think that's right. I think that was a week. That was 5 days. I think I did a typo there. That was 5 days. Looking at that trade. So sorry, it wasn't 9. It was 5. Entered on Monday, exited on Friday. $134 per spread. That's a 1.34% return on portfolio. Okay, for just a week. Guess what? We get these each and every week. Earnings aren't just 3 times or 4 times a year. They're 4 times a year for every company, and they space them out. So we have earnings going on all the time. So you want to tune in and stay tuned in because we cover a lot of these and we have pretty darn good success, pretty darn good track record here. So what's on the table for this week? Well, news is the image you see here will be changing because the tools that I use is being retired. Okay. And beginning next week, we will probably be exclusively using another tool. I'll talk about that more in the future. But here's kind of a sneak peek at it. Okay. We still get the charts. We still get the risk graphs. All right. Everything there. We're going to do a strangle on Celsius. Okay, going to do a strangle on Celsius. Now the debit that you see there, if you look at under the risk graph, you'll see a debit there of $682. That's $6.82. I just checked pricing before we came on the air today. Price for this is about $660. Okay, 660. And so $600 or just under $700 for a strangle on Celsius. And again, this thing moves around even after earnings. So hope we get a pop or a drop and then some follow through. That would be great. All right. And we'll see how we did on this next week. So it's a strangle on Celsius. All right. And we will see how we did. We'll update this trade next week like we do each and every week right here. So thank you for joining us. I hope you find this pretty interesting. We go over stocks and their earnings each and every week right here on Earnings Call. I appreciate you joining us. Thanks again, and I will see you right here next week. Take care.